So, hello Adrian, hello Elisa, how are you? Hello Anita, hello Helen. Good to see you all. Shame with the hello Simon, hello Susanna. I say this every time and I'm getting bored of saying it because we want to be meeting in real life in a nice conference room in a 5-star hotel where we can go for a beer after the session. But it is not to be. So in the meantime, we have the wonder that is Zoom to take us through what is going to be a really interesting session this afternoon. We have about 50 people signed up. As you all know, the session is being recorded and I'll be sending you the link to that recording tomorrow so that you can go back over this. I think this is such a fascinating topic and one that you wouldn't really think about. I mean, so my interest in this is because Mima did her MIM fellowship case study on fraud in small to medium-sized enterprises. And as I was reading it, I just thought this is something you simply don't consider. So I asked Mima and Gordon if they would turn this into this session, which of course they're going to do this afternoon. And I think you'll find it very, very, very interesting and enlightening and surprising. And if you want to read Mima's full MIM Fellowship case study, it's on the EuRA website under the Education tab under MIM Fellows. And it's also on the booking page that you went to sign up for today. So please feel free to go and download it. It's really super good. So all that remains for me to say, I shall disappear. Gordon, actually, I'm gonna be the PowerPoint slide helper if I can. So I will disappear. Just let me know when you want things switched on, switched off, moved forward, and I'll come back in at the end. I'll keep an eye on the chat box and the Q&A. So if at any point during the session you do want to ask a question or make a comment or you've got some experience, please don't hesitate to put that either into the chat or the Q&A, and we'll come to all of those at the end. So in the meantime, I'll disappear. Gordon, over to you.
Thank you, Tom, and good afternoon, everyone. And I'm going to kick off with a question for Mima because I'm intrigued to know, why did you get involved in this topic? And I've had the privilege of reading your case study, and it is fascinating, and I recommend it to everyone. But why the interest in fraud?
Well, hello, everybody. It was about 6 years ago when I was first asked to do forensic investigation to one of the companies, completely unrelated to relocation. I have a master's in accounting, so in theory, I am an accountant, but I'm more of Mrs. Marple, I think, when it comes to fraud. And my love of numbers and love of crime, sort of both those put together, just, I think it's absolutely fascinating. The whole fraud, the detection of fraud and preventing of fraud.
Yeah, no, I agree. It is fascinating unless you happen to be the victim of it. But yeah, in which case it's less fascinating. But anyway, that's what we're going to talk about today, and how to avoid being a victim of fraud. Now, when we use the word fraud, there are really kind of two aspects to it. The one we're going to focus on here is what we would refer to as insider fraud. That is within your own employee group or among your own directors, a fraud on the company takes place. The other aspect of fraud is external fraud, and we're all familiar with, particularly in recent years, the vast variety of cyber crimes that are committed, all aimed at emptying our bank accounts by unscrupulous third parties. So for today's purposes, mainly insider fraud. And as you'll see from the slide that's appeared, the broad agenda for today, we want to talk through to what extent it is a problem today in the business world and for businesses such as relocation businesses, and then move on to the practical steps we can take to reduce the risk of fraud in our businesses. We have a few case studies to look at, and then we'll try and extract from that the specific lessons that we should learn from these studies and that Mima and I have taken from them. Some other aspects of fraud we'll then touch on: police involvement, protecting your business with insurance against fraud. And as I mentioned earlier, we'll touch on one or two aspects of external fraud. And then we'll pull this together with a kind of top tips of recommended actions for relocation businesses. As always, please feel free to fire in questions at any time, and then we'll pull together some questions and answers at the end. So I'm going to start with delving into some questions for you, Mima, and let's going back then to basically how common is insider fraud today?
It is very common. It's impossible to really get the exact figures because especially with small companies, the owners tend to not to inform the police or report the fraud because they are afraid of losing face with their clients, losing trust with their clients. There are PR problems. There are possible really high legal expenses. So those frauds tend to not to be recorded anywhere. Also, what is in UK at the moment is that the only recorded fraud cases in UK, they have to be over £100,000 and they have to be gone through the court system in UK. So they think it's only perhaps 10% of all the frauds which will go through the court. So there is a massive, it's like an iceberg effect, and there is a massive number of fraud cases which will nobody ever knows about it apart from the victims.
Yeah.
But the insider fraud is shocking. It is 68% of all the fraud is committed by the employees towards the employer. So it's only, 89%. It's only 11% of all the fraud where the company is the victim happens from external purchasers. So it's huge problem. And every time when there is economic downturn, there seems to be more fraud happening within the industry. And now, especially after COVID, and whilst we are still in a crisis, that is considered economic downturn, and everybody is quite worried about what's happened. The add to confusion is that last year when the COVID hit UK, all the courts were closed for 3 months. So no court cases again, or fraud cases went to court last year. So this year's figures will be completely skewed because they will have to handle last year's cases and this year's cases.
Yeah.
There are very little, very conclusive studies being done because it's such a difficult thing, because if you don't report the fraud, even though it would be like £10,000, nobody knows about it. But out of all the studies done, it's 32% of all the fraud will take place in companies which employ less than 50 people.
Yeah.
So the numbers are not great, but there is a lot companies can do to prevent them.
Yeah. Interestingly, I just saw some Barclays Bank research on this, and it really confirms what you're saying. I guess this was among Barclays customers. 44% of them had been targeted for potential fraud, and of that, a fifth of them had been successful. So that's like 10% of Barclays customers. The average loss was £35,000. So yeah, most of these would not even be reported in the official figures. So very interesting.
This other thing what they use is the fraud can be up to 5% of the company's revenue. So that's so that, you know, it doesn't, the fraud, it can be a small company or big company, but if you, the average is normally 5%, which is quite a lot of money if you think.
Yeah, yeah.
And the smaller the company, the worse it is in monetary terms, because they don't have the big legal departments who can actually fight the case and get the money back and all that sort of stuff. The loss is greater the smaller you are.
Yeah.
When, you know, if you become a victim of fraud.
Yeah. Right. Drilling into the kinds of frauds that occur that, you know, are most common just now. And I appreciate at the moment, this is just the big picture we're trying to sketch out. What are the most common ones that you've come across in your research, Mima?
The most common are the false invoices, purchase invoices, payroll fraud, fraudulent expense claims, exaggerated travel costs, and misuse of client money.
Okay.
In all the cases when I've been doing the investigations, it's 9 times of 10, it's always the false invoices. People use fake names, fake companies, fake bank account details to pay the money. Not fake bank account details, but wrong bank account details to pay the money into.
Yeah, so we're not talking about things that are incredibly sophisticated and, complicated to set up. They're actually just pretty basic means of defrauding your employer.
It's very basic, and it's actually really easy. It's shockingly easy when the amounts of money are small, but when it happens quite often, the frequency is great. It becomes the sum starts to add up. And very often fraudsters are opportunists. They see an opportunity to rise that they can actually fraud. They don't think they're frauding a company. They have some sort of problem that they need to solve. But let's say somebody is short of money this month and they think, okay, I will just put an invoice through, which is £250. That will sort my problem this month and I will pay it back next month.
Yeah.
So they put the false invoice there, if they even have to do that on the first time around, for £250, and then they pay back the next month. But very often, there could be like a year's lapse before the next thing happens, and they do it again, and then the value is a bit more. It could be £400 or £500, and then it's just the frequency will increase very often. The fraud normally takes about 18 months from the first fraudulent payment, let's talk about payments, to detecting the fraud. So that's the average. So during 18 months, if you do £250 every month or twice a month, it's actually quite a lot of money.
Yeah. So again, it's not sophisticated in terms of creating something that will never be caught. It's actually just, you do something pretty stupid, you maybe plan to pay it back, and then the months go by, and because you got away with it once, you carry on doing it. And it takes, as you say, about 18 months on average for the employer to spot what's going on, even although it's not a complicated fraud, but just the time it takes to pick it up. Huh?
Yeah, and if you think, let's say a company turns over £100,000, and if there are £250 taken every month, even though you have the most sophisticated management report, which you wouldn't have if you turn over £100,000, it would be really difficult to figure out that £250 goes amiss every month, because it's such a small amount of money. Yeah. But in a year, it's £3,000. In 2 years, it's 6,000. So it's just, and a lot of companies have, like the case study what I used in my the paper I did for the fellowship. They had absolutely watertight system that if any payment is over £5,000, requires 2 directors' approval or authorization before that payment is made. But that then became one of them was traveling, only one signed. Suddenly that sort of, we go back to internal controls later on, but suddenly that sort of the whole watertight system was crumbling down. And that's where the person who saw this opportunity knew that even £5,000 bills can now be paid without any proper approval process.
Yeah, so there's a process in place. So in theory, the structure is there, but it's in practice, it's not applied, and therefore that's what creates the opportunity for fraud in a case like that. Actually, just as an aside, did you find that most insider frauds in small businesses, was it just one person, or did it tend to be a couple of employees teaming up? Or what was the pattern on that?
There are lots of studies about that, and all the companies I've been to, they are small companies, and it's always one person doing one thing. In that one company, a director was on a take, and the management consultant figured that one out. So he had won over the director. So he started to do that on his own. Couldn't quite do it on his own. So he had to strike a relationship with the manager of the accounts department. So they were then doing together. But that company was a turnover was over 22 million. So that sort of made it big company. But in a small company, it normally is only one person.
Yeah. Yeah.
They have a secret, they have some sort of pressure point why they are starting to do it, and then they keep doing it on their own.
Yeah. Okay, one other kind of big picture question is, what are the kind of obvious things that have now occurred to you that relocation businesses should be doing to prevent fraud? What are the most obvious issues that stand out? If only we'd done that, or we'd done that, this could have been avoided.
I think the easiest, it doesn't cost any money, it's just sort of how you organize your systems in your company, like separation of duties. That one, even if you have only 2 people in a company or 3 people were employees, you can always separate the duties. So one person doesn't initiate, authorize, record, and pay any bills.
Yeah.
If you just separate all those, that person can't get the whole thing through. And if somebody, let's say somebody would, you get a new supplier and you have to, the supplier has to send bank statement and everything else to prove that this is the real bank account for them. If you have somebody, even, I don't know, somebody from HR, if you have HR department, to adding all the bank details in the system, she will know if that doesn't match. So it's very difficult to put then fake invoices with the different bank details in. Like in one of the cases I was there, the account manager put fake invoices on her previous partner's name for property maintenance, but payable to her. Mm-hmm. Because she was in charge of, you know, approving, authorizing, recording, and paying all the payments. So if there had been somebody else adding the bank details in the system, they would have noticed they don't match.
Yeah.
It wasn't Jake's property management company. It was actually her bank details. So it's little tweaks what you can do. And I think everybody just have to think, it's almost like leaving cash on a table, like we talked earlier, Gordon. Somebody might take, if there are £120 notes on the table and you can take one of them, it's a temptation, it's there. And one missing, would anybody notice that? But it's just thinking, yes, obviously you don't do internal controls in your company just because of fraud. But the internal controls, like separation of duties, you do to close the door, to remove the temptation and remove the opportunity. Yeah. Which actually protects the employees as well. So.
And I guess too, just returning to our earlier point then, if you have separation of duties, it then means it would in fact require 2 people to cooperate to produce a fraud. And we're saying that really in small businesses, that's actually a very unusual situation. Therefore, the separation of duties would normally be a key way of preventing fraud.
And if you think in a banks, they do, every single bank in UK, I think it's worldwide, each employee has to take 2 weeks holiday. It's mandatory. They have to be away from the office for 2 weeks. And it's for them to get to rest as well, but it's mainly for the bank to check all that they are doing correctly. There is no money laundering, there is no fraud. Say somebody else jumps into somebody else's seats and works through for 2 weeks. And it's just the bank's internal control measure. How are we going to prevent this to happen?
Yeah. So we should be very suspicious if we have an employee who refuses ever to go on holiday.
That's one of the characteristics. It's true.
Okay, that's kind of given us a great big picture on this. And I think you've produced a couple of examples that we can kind of delve into a little bit to see what actually can happen when things go wrong. So I'm going to ask Dom to bring up a slide. Thanks.
So this is the fictitious invoice sample, and all these figures are completely, taken out of the blue. But so DSB, if we think about DSB with a turnover of £200,000, they are averaging 100 home searches per annum, and the consultant cost, I think it's most of the countries, but in England, the home search consultant costs, let's say, vary between £100 and £400 per case. So that means that the company would have budgeted about £40,000 for the consultant's cost for this £200,000 turnover. In a year, the average cost of the consultants has been less, so not the £400. So that means that the whole budgeted figure, £40,000, they would never reach that. But the person who has realized that all the consultant costs have been less than the budgeted figure, they can put 2 fake invoices per month to the system. They put it there, get paid £250 each. That totals £500 per month, which, if you put the yearly figure, that's 6,000. So if the budgeted cost for the home search consultant for 40,000, and this 6,000 doesn't take it over to 40,000, nobody would go and check because they are still within the budget. So the management, because they would be recorded in the system absolutely correctly, home search consultant costs, they wouldn't know every single home search consultant there is in a company going out. It would be very difficult for them to even think about it. And also if the person who's doing this fraud is using a proper home search consultant name, who they use anyway, but has just in a couple of the invoices changed the bank details, it's almost untraceable. It will not show in any management reports or anything else. And with the small companies, when you don't have internal audits that often, and you have external accountants, you probably bring in an accountancy company who does your year-end books, but they don't have to do a proper audit. What they normally do is they ask you a couple of invoices from your system, but they don't check whether the bank details match with the subcontractor invoice, or they don't see whether that invoice is completely kosher. So you need some internal measures to prevent this to happening. But like this sample here, £250, £500 a month, it's not that much to get any alarm bells going. But in a yearly, out of £200,000, the yearly cost would be 6,000, which is a lot. So the next slide, Gordon or Dominic. Don't you have the next slide? And then payroll. This is another sample which is very common. Let's say yearly budget for the salary is £84,000. The national insurance and tax payments for the company is £16,000 a year. And the monthly salary bill varies because of overtime, part-time workers. If they're busy, they have more per month and whatever. But the payroll employee who calculates everybody's payroll pays her or himself £600 more per month. That goes because she is in charge of calculating the payroll, paying the payroll, adding to people into the banking system. That £600 per month is £7,200 per annum. So out of that £84,000, because it's never exactly the same month by month, it's really easy to hide £600 per month. And also there is a sample about Coast employee set in the system with payroll employees' bank details. But if I can pass you, Gordon, this to you because there is another real life sample about this type of fraud.
Yeah, I was mentioning to Mima that when I'd just become chief executive of a law firm with probably around 150 employees. So it was a medium-sized business. And I had a director of finance, and a director of administration, both men of probably 50-ish. The director of administration in particular was an elder in the local church, very good standing in his local community. And I discovered that he'd done exactly as Mima has described there. Well, in fact, 2 or 3 years earlier, an employee had left the firm, and instead of taking her out of payroll, he had just diverted her pay into an account which he had set up. So basically, he was taking her salary. And it came to light, in fact, the reason it came to light is kind of interesting. I wasn't trying to detect fraud in the company, but what it was trying to do was divide the business into different profit centers so that I could understand better what was profitable, what was highly profitable, what was less profitable, etc. So for example, in a big law firm, you may have a divorce practice, you may have mergers and acquisitions, etc. And if all you can see is the income from these areas, you're not actually sure what's more or less profitable. So we started splitting all the employees against particular types of business within the firm. And that had actually brought to light that in one areas of the business, there was just this small but consistent cost over budget, salary over budgeted salary. And we wouldn't have spotted that. It was far too small to spot against the firm's income as a whole. But when we were looking at that, the income and expenditure for that part of the business, we could then identify there was something not quite right. And in fact, I had a meeting with the finance director and the administration director late one afternoon, and almost just by the way, I said, could somebody have a look at, this inconsistency? And the next morning, the director of administration came in and confessed that, in fact, what we picked up was his fraud against the firm. And it was a very sad case because I reported it to the police. We were talking about £100,000 or so. And he was actually sent to prison. His wife left him, his children disowned him, so a very, very sad case. And the kind of bonus out of it for me, sad case though it was that we were insured, and actually I received quite a large insurance payment. I think they paid up about £75,000 of the loss we'd incurred. The reason they held back 25% is interesting. They said that there should have been better separation between the powers of the director of administration and his team and the finance director. So it was that classic case of the person who's feeding the information into the system shouldn't be the same person who's then authorizing the bank payments. However you decide to separate it, you need two separate people involved. And the insurance company held back for that. But it was, and I mean, we'll go on to talk in a moment about the people who commit fraud and what their motivation is. This was a case of somebody as respectable as you could get, who'd worked for that business for many, many years. And there was no obvious cause. He didn't have a gambling problem. He didn't have a problem with prostitutes or any of these sort of classic things. He had just spotted an opportunity. So a sad case, and in the end, the cost to the firm wasn't that substantial. And obviously, it reinforced the need for better procedures to be in place. The other case I encountered actually is a very young lawyer. So this is going back many years ago. And I was sent to a small Highland village to do a locum for a law firm, a lawyer who was going off to France for a month. So it's to allow him to go on holiday with his family. And it was a tiny firm, just a paralegal and a PA. And turned out that the paralegal had been dipping into client funds just to subsidize his income and give him a better lifestyle. He was a young chap, and again, you would perfectly personable, nothing to mark him out as a criminal. And in his case, I don't think it was reported to the police. He was from a local family, and they paid up and made up the difference, and everything was dealt with quietly. But that was quite a number of years ago. And I think certainly a law firm today would always bring in the police, and just as a matter of ethical practice. So yeah, these are my two cases, and hopefully the only two cases I'll ever have. But in both cases, very respectable, trustworthy, inverted commas, people, and you would never have imagined that they would have been involved in fraud. So I don't know, Mima, if that fits in with the research you've been doing in terms of lessons we take from case studies.
Yes, it does, and it's very interesting because, you know, the two cases he just said are classic. They sort of, the characteristics of fraudster are all there. They are trustworthy, very well liked and known people. They normally been working for the company more than 4 years. 68% of them are male, still between 36 and 55, but the female fraudsters, they are on the rise as well. So but they tend to be younger employees and less senior level. With the small companies, like the latter, what you just, the paralegal thing is, a lot of small companies always say, no, we are too small, we all know each other really well, and we work so well as a team, and you know, the fraud would never come to our way, none of us would ever do that. And they have this big trust. Small companies, we want to empower people, we want to make them feel good, and it works like a family. But even as a, you know, when you own a company, you have duty of care to know that your employees are doing fine and they are doing well, and you know them and what's going on with their home life. But you never know absolutely everything. And like this, the first case, what you said, and the second case, the one wanted to have a better life, the other one just saw an opportunity and used it. You don't know what's really behind them, what, if there is a massive problem, what they need to solve. It doesn't need to be gambling. It can be just I don't know, I want to have that car because my next door neighbor has, so I just, or even the thrill of just getting the money out, it can be enough. Mm-hmm. But the fraudsters, most of them, something like, you know, like 99%, they are so well liked by their colleagues that they would never ever think that they are the ones who fraud the company. Yeah. And that's where the hurt comes, because every time when somebody hurts about, you know, oh, the company was defrauded and this is the perpetrator, there is always a shock, like not him or her, how come, but he was such a good person, or he's such a good person, and whatever. So you never know. That's why there is this saying that fraud is committed by good people who start to do bad things. They are most often they are first-time perpetrators. They don't have a criminal record. You can't find them. If you do your HR checks, there is nothing to bring, you know, put your alarm bells ringing at that point. So, and then something clicks and they start doing it. Yeah. And if we figured out what that is, you know, if there was one solution, what make people do bad things, that would solve the problem, but there is none such.
Mima, in your fellowship paper, you talk about a theory called the fraud triangle, and the three different aspects to it, which you've probably touched on already, but can you just remind me what these three things are in terms of the theory of fraud?
Yeah, it's really interesting. And already back in 1950s, there was Mr. Cressy who started to, he was a criminologist, and he started to sort of research what makes the criminals tick. And he took it from embezzlement type of, and this was the first time, by the way, when the white collar crime came into sort of the term white collar crime was started to use, people started to use it. So he starts to look, and he interviewed numerous criminals, and they were all white collar crime criminals. And he then created this concept called fraud triangle. And in his conclusion was that there are three elements of this triangle that all have to be present before people commit fraud. And the three elements are pressure, which we already touched a bit. So it has to be unshareable problem. A person must have something which they cannot share with their fellow employees, some sort of personal issue which becomes a problem, or it is a problem, and that's what they start to solve. So that's the pressure point. There has to be an opportunity. Without opportunity, they could not commit fraud. So it's almost like leaving a door open when you leave your house. If somebody sees that they can walk into your house and burgle you. And the last bit in the fraud triangle is the rationalization, which I find really fascinating, because the person has the secret problem or unshareable problem. They realize that there is an opportunity. Let's say they work in the accounts department of the company. And it's very often a financial problem, because that's what the fraud is about. And then they rationalize itself to themselves why they are doing it. So if they dip into the till, they take £1,000 out of it. The problem is not for them that they took the £1,000 out of it. That £1,000, the fraud becomes the solution to their own personal problem. So they're not setting up to do criminal act. They are solving their own problem. And that's the sort of the whole psychology of it. And that's why it's really hard to catch them, because before they tell somebody that they have a problem, you don't even suspect them.
Yeah.
And they won't tell that they have a problem once they started this fraudulent activity, because then it has become a bigger problem, not for the perpetrator, but in a view of police, in the eyes of police or anybody else. So it's almost like there's always a sad story behind every single fraud. If they're not career fraudsters, and there is percentages of those as well, but if we're talking about normal fraudster. So it's basically the Cressy came up with that there has to be a pressure, which is the unshareable problem. There has to be an opportunity, and the internal controls in a company, that is to take that opportunity away, because without opportunity, they can't do it. But none of the fraudsters would do it second time. First time, they could be opportunistic and just try if they can get the money out. But any more than that, then they have to rationalize it for themselves.
Yeah.
What they are doing is actually solution rather than a problem.
Yeah. I think one thing I took away from my experience in business when I encountered that kind of issue, my business approach had generally been you employ really good people and you give them maximum authority, you really empower them. And I remember listening to Richard Branson talking about his approach to business, which was very much that, this idea of maximum empowerment. But he used the expression loose and tight. And in running a business, what he meant was that, yeah, be loose in the sense that you empower people and you give them maximum authority to get on and do things. But be tight at the key points in your business, which would put your business at risk. So really understanding your business inside out and saying, yeah, we empower people to use their authority, but here are the things that really matter. And at these points, we have absolutely strict controls everyone understands, and we enforce these controls. And he would enforce them as hard as, you know, any old-fashioned boss would. And I thought that was very interesting and helped me enormously when I was running different kinds of businesses. And the other, I guess, learning lesson for me was the one I touched on earlier about we had created profit centers in our business, and it was that actually uncovered the fact there was a fraud going on. And so the importance of really understanding what goes on in your business as clearly as possible, not just seeing it in big, you know, here are the kind of headline figures, but actually being able to break these down into smaller units and really get behind what's happening in your business. So that attention to detail, I think, is really important.
It is, and I think it's also, you can empower your employees, giving them, being very democratic and let them go and be creative and do stuff. But it also, if you think about internal controls, you also give them a little bit of you give them a structure with them. So even though they can be creative and they can do their sales and whatever they are doing, but having the tight internal controls gives them pulls them back every now and again, and gives them processes to follow, and which means that they are responsible following the processes, being creative, but then the company pulls them back and just checks up on them. So it's also protection of the employees. Because let's say you had one person in the accounts and nobody ever give a toss what she does. So she does the accounts, she does the payments, she does the payroll, she does everything else. And then if something is wrong, somebody else has got in a system and let's say frauded the company some money, it's all on that poor employee's shoulder. She will get the blame, even though she could turn around and say, but nobody really cared what I did before. Nobody gave me any support.
Yeah.
So having to tie the controls in certain points, not in every single, you know, all the time, it means that it's protective of the employees, makes them more efficient. You as a management get a better, you know it's going well. So it's all all good.
Yeah, you're reminding me of something else there too, which is about the culture of a company. And you know, every business is a little bit different. But I guess you have to have a culture where people are not scared to report suspicions. And, you know, it may involve training, for example, on fraud and fraud prevention and having discussions about it. But actually that sort of sense of almost being a whistleblower, but for, you know, the financial side of the business where you think something is a bit loose and something just doesn't feel right, that people will come to you and can discuss any suspicions they have.
Yeah, and that's how the case study I used in my paper, the board was made aware by somebody in the company that they think something was going on, and the board contacted me and said they think there is £180,000 has gone missing, basically. And that was the reason why I went into the company. And I looked at the internal controls, I looked at how they authorize payments, everything else. And I'm not going through the whole case study here, but it was the largest company. The corporate culture was very democratic, but people were empowered to do quite a bit, you know, just go and do it. They had operations in 3 different countries at any given time. So the 2 directors was flying in and out they were lots out of the office. And then they contracted a management consultant who came to help both directors, because very seldom were 2 of them at the premises at any given time. And because it was so empowering, so democratic, there were controls, some controls, but it all started to fall a bit especially when the account manager was already mentioned, who'd been with the company for 14 years, decided to undo the separation of duties, take everything into her own little empire. So she was then doing the fraud as well. But like in that company, so 3 levels of fraud, it wasn't £180,000, it was actually 1.1 million without the director's fraud, one of the director's fraud. So in total, it was probably in a region of 2.5, 2.7. But just the management consultant and the account manager. So what they managed to do within themselves, because the company was, demographic and very little controls. Have they had more controls and a stronger managing director probably there as well, who would have kept an eye on the thing, would have probably lessened the fraud, not taken it completely away.
Yeah. Just some other aspects of fraud that we said we would touch on. Police, and what's been your experience, Mima, of involving the police when a fraud is uncovered?
It depends on the size of the fraud. Like this one, which was then 1.1 million, when I informed the police, or the company informed the police, it was too big for the local police department. So they then asked us to, call the SFO, which is the Secret Fraud Office in the UK. And they took the case on, they sat on it for a while, and the report came back, and this actually, the management consultant was a known perpetrator for them. So he's been frauding companies before. The account manager, she got off scot-free because she changed job. And then the management consultant left the country. So the Serious Fraud Office, after this happened 2016, they are still looking after, trying to find this guy who completely disappeared. And before, because police couldn't touch it because it was such a big thing for them, they didn't have the resources. The Serious Fraud Office, it will take time. Once they catch him, then he will have a criminal record. But if they don't catch him, he won't. It will never go to court.
Yeah.
So it's, I think in a smaller cases, when the fraud is not that big, I think the police is the right, you should always start with the police, but it's really difficult for the police, especially in the UK, because of the resources.
Yeah, I have to say my own experience with the police has been very good. In the case I mentioned in the larger law firm, my concern was bad publicity. I didn't want this to get out except in the proper way, as in when this person came to trial. I contacted the police, and they were discreet and helpful. It helped, of course, that in this case the perpetrator was pleading guilty, had confessed to it. So it was all about going through the formalities, but I certainly found the police very good to deal with and very helpful. Again,
you need the police.
Years ago, maybe your point about police being under-resourced in the UK, maybe they wouldn't be so helpful today. They would just say, "Oh, you get on with it."
But you need to inform the police to get the crime number to make an insurance claim.
Yeah.
So you need to always go that way first.
Yeah. And that leads us on to the insurance question. I mean, what occurred to me was, firstly, in the large case I was involved in, it was great. It was almost like a bonus getting that injection of a payout, a cash injection. I was trying to do things in the firm, and it was almost a cash bonus because, in a sense, the losses had been incurred over the 3-year period in advance when this fake payroll had been going through. So that was already in the accounts as payments. So in some ways, this was a cash bonus coming in. But clearly, that aspect aside, it would be incredibly damaging if a major fraud occurred in any size of business. And could mean the end of the business. I just wonder how many standard business insurance policies do cover fraud. And it will be very interesting, perhaps as a follow-up to this, for EuRA members to be checking, you know, just exactly what their coverage is and what the size of any excess is, that kind of thing. Do you have any experience of that, Mima?
I checked our insurance and we are not covered for fraud.
But then you've got great systems in place, so you didn't need to do it, right?
Yes, I checked it after our last discussion and I was like, oh no, we're not covered. So
Yeah. Well,
we are for lots of cash, but you know, nobody deals with cash any longer.
Yeah. Yeah.
So it's a bit outdated, or no checks.
Yeah. Right. Well, that's maybe at least if you know, I think that's the important thing. You may decide that it's not worth the premium or the excess is so high, it's not worth it. But you should certainly know whether you are covered or not and make a conscious decision around it. Speaking of somebody who's benefited from the policy. I guess we should just touch on external fraud, although it's not our main subject here. But I mean, we're all so conscious now of these of the cybercrime aspect of it. We touched earlier before we started really on CEO instructions, and you know that classic, you get in something that appears to be from the CEO of the company saying, please make this urgent payment, because the email address and everything about it looked perfect. Have you come across any external frauds in your work?
No, I haven't. It's always been employee, sort of internal frauds.
Yeah.
They call it I call it now the enemy within. So it's when good people do bad things and they are actually from your own company. So that's sort of, but no, not external frauds, but it's on a rise, like credit card fraud, email fraud, everything like that. It's all on the rise.
And so much of it is related to hacking into your system. Once somebody gets into the system, well, it can go right through to ransomware and all the horrible things that we hear about, and in many cases probably don't hear about. I don't know, maybe smaller firms are safer in that respect than the very large firms, because you know, clearly it's the large companies that can afford to pay large ransoms to get their data back and that kind of thing. But clearly cyber insurance is very, very important to all businesses. Right. Before opening up for questions, I felt we should try and summarize what we think would be the top tips for relocation businesses to avoid fraud. So what are your thoughts on that, Mima? What would you say on that? I
would say it's better be safe than sorry. Fraud is a bit like COVID. It doesn't sort of it can you know, catch anybody off guard. And setting up internal controls, they are not complicated. They are really, if you do the EuRA EQS and you do the risk management bit of that, you are actually setting up your own internal controls without even thinking about it. Yeah. It comes as a side. It's all risk management. Yeah. You shouldn't set the internal controls only because of fraud, because fraud is just tiny bit if it's even happened, and hopefully it will never happen. But just think about risk. We talked about cyber risk, cyber insurance. We think about all these external things. We are arming ourselves against the external risk, but sometimes it comes from inside. So you just have to be aware and protect your employees. You know, setting up the internal controls as well. It's not only their fault what happens. So if they're not fraudsters. And don't leave everything to external accountants. Just do your own internal audits every now and again. It takes 15 minutes to go through some of the invoices, some of the bills you've been paid or have been paid by your company, and just do little checks.
Yeah. Yeah, well, certainly I would agree with all of these points. something that reminded me of GDPR, and of course, every webinar we have, I have to bring GDPR into it. So this is my way of doing it. You know, the starting point was always, do you understand the flow of data within your business? And you had to understand that, you know, what was coming in, what was going out before you could set up to comply with the GDPR. And in some ways, I think financial risk and managing risk of fraud is exactly the same. You know, the starting point has to be understanding the flow of money in and out of your business, whether that's in the form of payroll, whether it's in the form of invoices to suppliers. And so you then can identify the risk points. But if you don't have that detailed appreciation of the flow of finance in your business, then you know you can't really manage the risk properly. We've talked about double checks and segregation and where that's important. I would have thought that also some training so that staff are aware of the risks of fraud and when to question things. And something I just saw very recently, which was actually from a charities organization. Apparently charities suffer fraud, insider fraud, at a huge rate. And they say it's not because they employ worse people. I mean, obviously you assume they employ good people, volunteers in many cases, but because they rely on trust so much. And if you're running a charity or a local charity shop, you tend to think in terms of you trust people. And in fact, because you don't have the processes in place, you're more liable to suffer fraud, and the figures suggest exactly that. So don't trust people when it comes to matters. We don't want to become paranoid here, but it is interesting when you start seeing these patterns. Okay, Dom, I think we're ready to pick up on any questions that may have come in, if we still have time.
Yeah, thank you very much indeed, Mima. Fascinating, Gordon. Thank you very much. That's quite scary. One question that's just come in from Elisa. Thank you, Elisa. That's a very good question. Actually, I had a note on my piece of paper. So Elisa says, while screening candidates for recruitment, and in the case if the previous employer has not put forward a legal case, is it possible to make sure a candidate has not committed fraud in the past? And Mima, when you were talking about the director who was known to the Serious Fraud Office, if a prosecution hasn't been taken or launched, that wouldn't show up on a criminal record.
No.
Yeah.
There is nothing in his record.
Yeah. But
so it won't show. And also when you're recruiting people, if we're not only talking from the fraud, you know, like we're talking now, fraud point of view, they don't normally start to fraud the company straight away. So, you know, if the average fraudster, you know, the time what the fraudster has normally been in the company is 4 years plus. Mm. You can, I know the recruitment is really important, but because there is nothing in their records if they haven't done it before. Right. So it's sort of, it's more to look for the sort of the other signs which comes up, that they don't want to go on holiday, which is very often the case. They are always first in and last out in the office. They blame other people at the company, and they just get on with their job, and he's a model employee and liked by everybody. So, you know, but that's not saying that, you know, everybody who behaves like that is a fraudster or is going to be a fraudster. Sure. I don't know. It's really difficult.
I remember here, and I can't remember who told me this, but a very interesting intercultural quote about how in America you are perceived as not doing your job properly if you leave the office before 8 o'clock in the evening. So that would make the vote. In Germany, you're not perceived as doing your job properly if you are still in the office at 8 o'clock in the evening, because you have enough time. Anyway, Helen put a question in the box. Are smaller companies at greater risk of insider fraud because with a smaller number of staff, it's harder to implement effective segregation of duties and protocols?
Sorry, what was the beginning? I missed the first bit.
Yeah, okay, so smaller companies at greater risk of insider fraud because with a smaller number of staff, it's perhaps harder to implement effective segregation of duties protocols.
Well, it is and is not, because if you have, let's say you have 3 employees and, you know, you all do operational, you all do pretty much everything. But if you separate your duties when it comes to bill payment and invoicing. That's already that. You can say, okay, one of you will do recording of the bills coming in. One of you will record all the, you know, do the payments, and the one does the invoices and adding your bank details. And then you turn around, you go around. And next month, somebody else does it. So, you know, as long as you don't give, very often small companies take external bookkeepers in and they do everything.
Yeah.
And it's going as it's absolutely fine if that bookkeeper is not bent. Sure. Because, you know, then that bookkeeper has access to absolutely everything in a company. But if you in a very small company, if you just rotate your duties a bit, one person cannot commit the fraud without the others not finding it out.
And insist that they go on a holiday every so often.
And again, that's very cultural. In the States, you're seen as just being the ace employee if you don't take your holiday allowance. Adrian Leach, you've made a couple of very good points. First of all, do you think that when we talk about fraud rather than theft or stealing, society tends to be more tolerant? Should we use words such as theft to help deter the opportunist? It goes from a sin to a deadly sin, I suppose.
Yeah, it comes back to this the point that Mima raised earlier about the type of person who typically commits a fraud. You know, it's you know, white collar, respectable. I mean, I've known of several others in the legal world, and it's the last person you would expect. So there is something about, because it's fraud and it's a certain kind of person, we regard it as a lesser crime. But yeah, Adrian is absolutely right. It is theft, and that's it just happens to be financial theft. That's all. But maybe we should rename it.
Can I jump here? If I go back to Mr. Cressy, he was quite good. He said fraud or embezzlement is when trusted people become trust violators. And it's always non-violent. Yeah. So theft can, if you know, that could be violent. But I think because fraud is 99.9% of the time, there is no violence. It's just basically you are misusing your trusted position within the company.
Helen and Adrian both make a very similar point. Adrian says nothing happened to 2 directors of a relocation company who defrauded their utility company client of £2.5 million. One left the UK and the other disappeared, and the utility company didn't want the publicity, so the relo company closed. And Helen says, I know of one instance where an employee was identified as having committed a fraud against the company, but no legal action was taken to avoid the adverse publicity. So that individual, going back to Elisa's point, will have no stain on their character, which would follow them.
Yeah, and you know, if they go to a new company, they leave the company where they've done the crime. They move to a new company. They will not give, you know, ask for references. You can't say bad references because you have nothing to prove. Yeah. You can't say we think he or he committed a fraud, but you know,
in court, for defamation.
It's really difficult. But it's like what Adrian said, the utility company, the 2.2 million, 2.5 million. Like this company where I was, the main perpetrator is probably, it will be abroad now, left month after I went into the company and has not seen or heard since. His car was found and his house is empty. So he's probably somewhere where they can't be extradited to UK.
Sure.
So.
And I'll leave the last words on the Q&A to Alistair Murray. Thank you, Alistair. A couple of years ago, our accountant received a fraudulent email pretending to be from me, asking to transfer money. She called me to double check if it was genuine. At the time, I was out of the office attending a cyber fraud presentation held by our... Which is Right, that's poetic, very poetic. All that remains for me to say is, Mima and Gordon, thank you so much for bringing, you know, what is genuinely something that many of us would never really think about into the realms of things that we do have to think about that are actually very simple to avoid by, as you've said, Mima, putting the right protocols and processes in place. So thank you so much. That's been fascinating. If anybody would like to, the link to Mima's case study is in the chat, but you'll find it on the EuRA website under the Education tab, under MIM Fellowship. So Gordon and Mima, thank you so much. That's been fascinating. Very nice comments coming through the chat box as well. Thank you, Elisa. Thank you, Lorna. Thank you, Adrian. Thank you, Gordon. Thank you, Mima. And I will be sending you the links to the recording. So if you want to share this with your team and spot the person whose face turns red during that little meeting, then go right ahead. So thank you to everybody for attending. Thank you, Mima and Gordon, especially for bringing this to our attention.
Thank you.
Thank you for the
Bye-bye. Bye, everybody.
Bye.
Bye.